Your take on this? Are you also on the same lines with DP sir? No news is good news, at least from a taxpayer's point of view.
Yes, Kavita, I would completely concur with DP sir for the fact that this is a 10 on 10 budget. Given the fact that it was a vote on account kind of a interim budget, the simplicity has been maintained. It has been a theme of undercommit over deliver, which I think is brilliant, at least on the economic variables like fiscal deficit, which DP sir touched upon. You're looking at 5.9 coming down to 5.8. This is not a norm in India. It has not been a norm in India, but you see that kind of a trend over the last few years. You look at the tax collection projections. Last year, there was a growth of 15%. This time, they've just spoken of 12% growth in spite of having penetrated 77% on the revenue target. Still, there's a sense of an undercommitment. You look at the borrowing, which was 15.4 lakh crores, down to 14.1 lakh for the next financial year, which has definitely improved the yield curve from a flattish yield curve. It's just become a downward sloping yield curve, which I think strengthens our position in the global space, which we are today known as one of the largest economies, which is not facing inflation and the resultant interest. So that has got solidified. The cascading effect on equity being revalued. So the value you see of 3,000 points on Nifty from October till now gets solidified because of a lower interest rate. And if you get included in the bond indices globally, you're looking at 6.4, 6.5 on the 10-year GSEC in the next few months, which definitely brings in momentum on both equity and the debt side. So I think this is the best outcome you could look at, and the kind of simplicity definitely creates confidence in the FIIs, who have been pumping in money even in the small cap and the mid cap space. So portfolios get protected on the equity side is the key crux. Especially after a rally like that, I would be a little worried if some mistake you do has a larger impact. But great, no mistakes. That means solid equity markets, at least a buoyant equity markets, if not a rallying ones.
That's exactly right. And also, to sum up what PM Modi also said in his speech after the budget, Feroze, that this is Vishwas ka budget. This is one innovative budget where the four strong pillars would be youth, women, farmers, and Garib. That is what he also highlighted. Vikas ka budget, Vikas ki guarantee is what is our campaign also called, and Vishwas ki guarantee is what Mr. Pradhan Mantri Modi also said. Feroze, the question to you is, last time when I spoke to you, also said between the lines reading will be very important. From your point of view, what is a takeaway for a voter? Also, from this interim budget, what do you read could be the main focus point in the upcoming full budget?
Yes, if the government continues, that's a fair assumption, I'm sure most of them would say. If that's the assumption, then if you look at the read between the lines, one thing which has been consistent is simplicity. The simplicity is something which nobody can deny, and this was a great evidence of that. If simplicity is the theme, then of course taxation simplification will be the continuance. And the one thing which we have been anticipating and predicting should happen sooner than later, in terms of the capital gain simplification of the 3-4 dimensions, bringing it down to 1 or 2 dimensions from the 4 dimensions which we have. Domicile, people residing in India have different taxation, different assets have different taxation, different periods have different taxation, different STT status has different taxation. This will, in my opinion, with a large probability change. Then coming to Vishwas ka budget, I personally think Pragati ka budget is definitely on the cards, because if you look at the kind of budgetary allocation for home affairs is about 2 lakh crores, for rural development is about 1.77 lakh crores, for agriculture, which is 24% of our GDP, is 1.27 lakh crores. Defense, this is the first time we have had defense exports, defense of almost about exports of almost about 30,000 crores. So point I'm trying to make is with this kind of all variables looking very, very bright, I would think that this is certainly a Vikas ka budget. And when you're looking at home as 2 crore homes to be built, when interest rates come down, it's a double benefit for the consumer, especially the lower strata of India, slum dwellers or the people who live on rent. If the interest rates are lower, they will be able to borrow and absorb this supply which the government wishes to bring in the next few years.
Yes, Feroze. Tactical allocation, any of the sectors, do you think that should be a call for your portfolio right now?
Yes, Kavita, we can do that. But from a mutual fund investor standpoint, what happens is if you look at Nifty, there are some sectors which are anyways overexposed. Like 32-33% of Nifty is BFSI. The second largest sector is IT. The third largest is auto, and fourth is consumer staples and consumer defensives. So what happens is whenever an investor looks at sectors as or an extra sector fund, he or she needs to be very conscious whether the diversified category itself has a large exposure in them. But having said which, I think themes are good. See, if you're looking at housing as a theme, then there is cement, there is steel, there is building material, infrastructure. These are the themes which get encompassed in an infrastructure fund beautifully. So I think a sector fund like a healthcare, IT, and banking should not be taken because they are anyways a reasonable part of one's portfolio in the form of diversified equity funds. So infrastructure surely, and if I have to be more specific, in the best infrastructure fund I would vote for would be an SBI infrastructure fund. Not because DPC sir is here, but I would definitely concur. That's one of the best fund houses. From being the largest fund house, I would not want to take sectoral or thematic exposures with a tiny fund house, but the largest one because of the depth of analysis and the analyst and the fund manager, the experience they have. So if you're taking a little higher risk, go to the top guys, and SBI is the top one. And I think SBI infrastructure could be a fund if you wish to really play that theme.
Right. All right. So Feroze, DP sir decided that he wants to go everywhere in India, and in Lakshadweep, Ayodhya, no, India is a theme for him. What's on your bucket list now?
Of course, Ayodhya is on my bucket list. Of course, Mr. Rathi was fortunate to be there on the opening day, and we are reasonably envious of him. So we're waiting for our turns. Having said which, of course, I think Indian tourism is going to get some fillip, especially because of the TDS, TCS on global tours, which I think is logical enough. I think the way the government has thought about to make sure that the people who are honest taxpayers get benefited, and the ones who are actually evading tax get caught in the tax net. I think both are being done beautifully. If you look at when Minister Saiba said 93 days of tax refund has come down to an average of 10 days, that's no mean task achieved. That's like simplification. I think in a taxpayer's biggest benefit is not to give you a 3, 4, 5,000 rupees SOP every budget. It is about making your life simple. A pre-filled tax file is such a boon. So I think that's on one side. The TCS collections have not been changed on the tour package. Of course, they've been fair, saying that up to 7 lakhs. Now, even if you bought yourself a tour package, you don't have a TCS and a refund to claim. I think that limit was missing. Now that limit has come this time around.
But Feroze, I also would like you to decode the youth spending that the finance minister also focused on, and having nil interest also on that particular spending. If you have the finance bill on you, and if you've gone through it, the document, what exactly is mentioned, and what kind of benefit are we talking about?
Sorry, Kavita, I couldn't hear your question though.
Sure, I will repeat that for you. So I'm talking about the youth spending that the government wants to accelerate to, and is also offering interest-free loan to a particular section of youth spending. What exactly are we talking about over here?
See, when it comes to youth spending, I think the interest-free loan on the innovation side, the startup side, the innovation side, I think is the first time we ever broke into the top 50 countries from an innovation standpoint. I think youth is largely about trying to propel a startup culture. Of course, the sunset date also has been extended from March 2024 to March 2025 in terms of the tax benefits which startups have. That's point one. Point two, the kind of loans, the 50-year loans, those were the two areas where youth will get benefit. As far as the finance bill is concerned, that's what has come to my notice, which will propel innovation. I think if we have broken into the top 50 countries in the world in terms of the innovation quotient of our ranking, I think that needs to sustain because that's what will propel us ahead after about 10-15 years. If the decade has to be ours, we don't have to do too much on innovation. But if you have to make the century India's, then innovation becomes a key pillar on the basis of which progress could be made.
Feroze, the same question to you with a slight tweaking. I also want you to give our viewers some portfolio tips, like maybe top three, and your expectation as a voter and obviously as a market investor, portfolio tips.
Sure. First, let me tell you that I would say that this budget is a phenomenal budget. So I'm very very excited and happy because it's not not spoken anything more than what was needed. That I think is brilliant. Then coming to from an investor standpoint, this budget surely helps me submit to all the audience, saying that we in studio rooms speak of 60% equity, 70% equity, and 30% debt, and probably no real estate beyond consumption. But if you look at India's allocation out of the 740 lakh crore, the equity allocation is sub 10%. Equity mutual funds is just about 3 to 4%. One is what we assume that will be followed by people, and what actually as an aggregate we as Indians have. Now, that needs a dramatic change. If that needs to happen, we have to all introspect and see, if I don't come to 40-50% equity today, then what are we waiting for? Then if this is not a great recipe for a 40-50% in equity markets, then what is? So I think that's where the larger question lies for each of our portfolios. If you're not 40-50% in equity, you're surely not in the best of the strategies. Of course, there's going to be markets going up and down. Markets, that's the nature of the beast. It does 15% correction every single year from peak to trough. That's why it gives you 4 times more than an FD or 3 times more than an FD. Probably, of course, not always, but I think so. You deserve that money, extra return over a fixed deposit because of weathering that volatility. So get to 40-50%. I don't think there could be a better case of at least having 50% of your money in financial assets, especially equity.
All right, I think with that, it's a wrap on the show. So it's Vishwas ki guarantee and Vikas ki guarantee from the interim budget today. Thank you so much, both of you, for being on the show today. Thank you.